Gareth Soloway from InTheMoneyStocks.com is back once again to talk about the current outlook for gold and Palantir going physical. This and more on this week's episode of Metal Money. I'm your host, Patrick Vieira. Gareth Soloway, welcome back to Metal Money. How are you doing?
I'm doing really, really well, Patrick. Thank you for having me back.
Glad to have you back again. You know, August has been a real roller coaster ride for gold. It had a high of 1831, and then we saw a low of 1680. And then in the last 2 weeks, the price pushed up again, and now we're seeing this long tail on the monthly chart for August on that candlestick. Can you share with us your thoughts on the price action, and what does a chartist like yourself see?
Yeah, so the first thing that struck me when we had that sharp fall off a couple weeks ago in gold was that it basically coincided with the pop in Bitcoin. So that was the first thing that jumped out at me, is that this was more of a rotation of capital where you had investors that had been in gold because they thought Bitcoin was going to go lower. They started to get convinced that Bitcoin was actually going to move up, and they moved out of their gold holdings to get into Bitcoin. So you saw that direct correlation. Now, what I've been so fascinated about is the recovery in gold. So we have gold trading back to where it was prior to that dip, even though Bitcoin is actually making new highs today. I think Bitcoin pierced 50,000 today. So what that tells me is that the big players, the institutions, bought the dip on gold very, very heavily. They said, okay, this is a steal of a deal right now on gold. And they ran in, they grabbed it, and very, very quickly you have gold back to where it currently was trading prior. Now that to me is a very bullish signal. Anytime you see that type of price action where something falls as much as gold did and recovers that quickly, it again tells you likely further upside going into, the next couple weeks to couple months.
Yeah, and Gareth, last time we spoke, we kind of saw that 1750 was a real battleground for gold. And last time we had you on, you mentioned a Fibonacci retracement was pointing at a 1750 floor before a big move up. Are you still holding firm on that 1750 floor before a big upward move for gold?
Yeah, so there's no doubt that on the panic selling where you got the exodus going into Bitcoin, so money rotation, you saw a pierce of 1750. But again, I think the recovery getting us back to this 18 plus level just speaks to how big that Fibonacci retrace level was, that it was able to recover so quickly and move back to the upside. In fact, I'd like to show this chart with or share this chart with you guys about the chart on gold and really just talk about what's going on here. So this is a chart of gold going back to 2020 when we had the big move to the upside, right? And what we've seen here is initially you had this bullish consolidation, but this was the weakest bullish consolidation. It was the steepest kind of sell-off. And what we saw was by connecting this high here just over 2100 to this high, it coincides with these lows here. And if you look at the recent dip on gold, it went right to that level. It actually pierced really quickly and then recovered. But this is telling us this is your new support line. And you actually are now trading in this, what I would call a band. So, this would be band number 1, band number 2. And you've now made it through band number 1, and you're now consolidating in a bullish manner between band number 2 or just underneath band number 2. And this is really what I'm following now, going forward over the next couple weeks, I want to see gold take out this trend line here of band number 2. If it does, you have a pretty clear upward swing all the way back to 2100. And I think you remember, Patrick, last time I was on, you asked me about my year-end target, and I said 2100 is still very likely on gold, and I'm still sticking with that. I still think you have a lot of buying pressure. Every time gold dips, you're getting buyers to come in here. Now we just need to see it break out above key trend lines like this band number 2, and we can actually look for further upside to that $2,100 price target.
Okay, well, that's good news for a change. Yeah, gold is holding that 1800 level, so that's great. We're seeing a bump with it today. And but looking back to March of 2008, again, a monthly gold chart, when the gold price first crossed $1,000 an ounce, that was a new record, and prices didn't surpass that 1,000 mark until 2009, and some 18 months later, so there was a bit of an 18-month correction. Are we seeing something similar now, 12 months since the new record last year? And this correction of sideways action is nothing new under the sun for gold.
Yeah, I mean I'm in that exact camp. So I mean, I always look at history. History is the best kind of arbiter of what's going to happen in the future. I always go with history until proven otherwise, and you have to look back at those previous periods. In fact, that's where my Fibonacci retrace came from, when we took out that high and the retrace that occurred there before it blasted all the way up to that 19-ish hundred level, which was that following high pivot before we recently took it out when we got over 2000 here. Now, looking at that, you have to say, okay, yeah, 12 to 18 months is a possibility. If you look at the timing, we're getting into that, right? I think gold last year it was July, I believe, July or August when we made that high pivot. And here we are in August, late August. So you're past that 12-month mark here, and you're going towards that next phase, which does again tell me that at some point we should have a significant move higher, which should take gold ultimately in a couple years to my target of 3,000. So again, I think I even said this to you in one of the past interviews, and it's great. I love being able to talk to you guys and keep you guys updated on a every month or every couple month basis. But once we take out that former high, which was around 2,100 or so on gold, there's not a lot stopping it from getting to about the 2,800 to 3,000 level in a short amount of time. I love this. Gold, I would say I'm even more bullish than I was last time because of the recent flush in gold. A lot of people would say, how when gold can flush that quickly, what makes you so bullish on it? And the answer is the recovery. That is such a bullish thing to see gold recover so quickly. And then you look at the Federal Reserve, again, just the printing of money, all the stuff we've gone over in past interviews that continues to occur. And yes, we're going to get tapering here, but every past cycle, in terms of the Fed coming to the rescue, the Fed always inches up interest rates a little bit, and then the next crisis happens, and then they have to drop them even further and print more money. And like I said before, history is the best truth teller of what's going to happen in the future. So I'm in that camp that we're in a cycle where the Federal Reserve, yes, they'll raise interest rates a little, then the next crisis will occur, and the printing of money starts all over again.
Gold posted its second consecutive week of gains at the end of last week, while silver saw 3 consecutive weeks of a decline. Are your indicators showing that silver perhaps is oversold, or is there still room for silver to fall a bit further?
Yeah, so silver's been something that, and from our past interviews, your viewers know, is that I've been more bearish on silver. Silver has that industrial component, and for the last 6 months, I've been saying, be a little bit more careful in silver because it has that industrial component where there is going to be this air pocket. Now, I didn't foresee necessarily the Delta variant coming in to play as much as it has, especially all over the world now. It's really taking over. But just the idea that people had saved a lot of money during COVID initially, and they were going to spend that was going to drive initial silver potentially higher. We haven't seen it really take out the highs even on that. And now you're coming to a point where a lot of people have spent the money they saved, and that creates a little bit of a lack of buying of goods that maybe is influenced by silver. So silver to me is in a position where I think long term, if you're looking at 3 years out, 5 years out, silver will be significantly higher, $40, $50 an ounce easily. But in the near term, I do think there could be some more downside. In fact, let me show you my chart here of the silver chart here and what it's telling us at this point. So here we have the silver chart, and you can see it's basically holding in a range. Number one, it hasn't bounced back like gold has. So here was the dip that we saw a couple weeks ago on that, and you could see again, yes, silver's had a small bounce, but not to the extent like gold came back all the way back up here. All right, so that's number one of a concern. The second one is this trend line right here, which we continue to hammer on, which is around $22.40 per ounce. As long as that holds, you could get away with giving the benefit of the doubt to silver. But if this breaks, if this trend line around $22.40 breaks, you have no major support till 19. Now, as an investor, I'm pretty decently invested, heavily invested in gold right now, gold miners and so forth, but I am more on the sidelines of silver until it comes down just a little bit more. And again, could I be wrong? Yes, of course I could be wrong, but the chart is just telling me that there's a lot of other things going on here with silver that could drive it lower before it has that next big leg to the upside.
Yeah, that was going to be my next question where, in your technical analysis, is there anything screaming at you or something that has your attention right now?
Oh, I mean that's a good question. So I would say, I mean, in technical analysis terms, I would say the Bitcoin chart is the most fascinating right now because it's really playing out in the ways of how a chart is expected to play out. And what I'll do is here I'll quickly show this chart here of Bitcoin, and I annotated this chart so it'll give us a good basis for your viewers' understanding. So basically, you've had picture perfect movement on this chart. Here's your Bitcoin chart. You had a head and shoulders pattern, which took us to the high of 6,500, and the dip, then the other shoulder, and then basically if you calculate the target, and this is one of the big calls that I made this year, was a target of 30,000 for it to play out to. Once it broke this neckline, which is this connector here, it went right to 30,000, which again is a calculated target of the head and shoulders. Now, once it gets to target, oftentimes what you'll see is a bounce back on Bitcoin or on any chart to what we call the scene of the crime, which was the breakdown trend line. And you could see Bitcoin's coming right up underneath this 52.5 level. Again, I think we pierced 50,000 today. In fact, when I did a snapshot of this earlier today, it was at 50,236. But this would be a major resistance point. So believe it or not, as much as I love Bitcoin and gold and even silver in the longer term, I am bearish on Bitcoin once it gets to this 50,000, 52.5 level. One of the things, now this is going to get interesting here. One of the things that everyone is always telling me, and there's so many bulls out there on Bitcoin, they're saying that this time is different, right? So what makes this time different? I want to show you guys past cycles on the chart of Bitcoin here. So take a look at this. This is the 2013 massive move up on Bitcoin that went from $100 to $1,300. It then corrected to $450, back to $1,100 before going back to $100. And again, think about what we're seeing on Bitcoin. Bitcoin was at 65,000. It then corrected to 30. Now it's moving back up. It's following this same playbook, which if it continues means that we have further downside to go on Bitcoin. Now you might say, okay, well, one cycle on Bitcoin, what does that matter? Well, let's take a look at another cycle, the 2017 cycle on Bitcoin. Here you had the massive run up to 20,000. It corrected to 11,000. Then it went to 17,000 and change before going down to 5,000. It actually went a little bit below that. So you could see that, until proven otherwise, it's hard for me to say this is different. I mean, so many people out there are saying, well, there's more players, there's more institutions in it, and so forth. But again, being just a pure chartist and keeping emotion and my personal feelings aside on Bitcoin, which again, long term are hugely bullish, I can't really say that this time is going to be different until proven. So that's where I am right now on it. And I think it's just a fascinating technical chart to look at how past history is really dictating what the future could hold here to the perfect degree.
Keeping on the topic of Bitcoin, we saw Palantir the other week. They bought some 50 million in physical gold, and not the ETFs. And a lot of analysts were thinking, why didn't they buy Bitcoin? But Palantir chose 50 million in physical gold over ETFs. What's your take on that? Why do you think they went with ETFs? Why they went with physical gold over ETFs?
So I think they trust the physical gold more. I think they like that aspect. I think it was a great thing, and it also showcases, by the way. I mean, again, I always preempt this by saying longer term, I love Bitcoin, but Bitcoin bulls and hodlers, they're just so focused on the massive success that it's going to be. They don't recognize the price value fluctuations in the near term. And as a company like Palantir, you can't be just you don't want to have to deal with the volatility right now, especially with regulation still on the fence with Bitcoin. Now, once Bitcoin gets regulated, and I know a lot of people say, hey, regulation is going to be bad. I'm all for regulation because you get regulation in the space and you're going to get more institutions to buy. You can get pension funds to invest a portion of their assets in Bitcoin as well. That's really going to be where it explodes hugely to the upside, 100,000, 500,000 down the line. Going to Palantir, Palantir is proving that they understand the risks to the dollar, right? So they know that the dollar is getting diluted and they want to be diversified out of dollars, but they don't want the volatility yet and the risk of regulation for Bitcoin or other cryptocurrencies. So that's all they're doing. My guess is over the next 6, 12, 18 months, more and more companies will follow suit with Palantir, and they're going to eventually buy some Bitcoin, but they're going to diversify with gold and diversify out of US dollars. Now, they're obviously going to, these companies are still going to hold a lot of dollars on their balance sheet because they have to be able to make transactions easily and so forth, but ultimately, it's very, very bullish for gold, and continues with my thesis that we should see higher highs on gold in the not too distant future.
Gareth Soloway, you've given us so much in such a short amount of time. We appreciate it and hope we can get you back on again soon.
Oh, thank you, Patrick. It's been a pleasure, and I look forward to our next chat.
All right. Thanks again, Gareth. That was Gareth Soloway from InTheMoneyStocks.com offering his take on the current outlook for gold. As always, please leave your thoughts in the comment section below and remember to keep it liquid, keep it real. And I'll see you on the next episode of Metal Money.